Trading breakouts, it's a very popular trading strategy. But you know what? The way that most people use it, it has a high probability of failure. And that can hurt your trading account, can hurt your trading performance, and there's a much better way of trading breakouts than the classic approaches. And this is my favorite one, trading breakouts before they happen. Stick with me to learn how I do it and how I use breakouts from higher time frames to take quick scalps on lower time frames. Hey everyone, I'm Pedro and today I'm going to teach you the right way to trade breakouts and avoid a lot of unnecessary losing trades. Before we get started, make sure that you subscribe to this channel and click the alert notification. Just a quick disclaimer and let's start. So here we have an example. This is an H4 time frame. It doesn't matter what market it is, and it actually doesn't matter what time frame it is because this works on all time frames. So let's take a look at the chart. We can see that previously here the price was on a good uptrend, on a steady uptrend. It was just making small pullbacks to the moving averages, and after every pullback the price was making new highs, but at some point the price started making a sideways move. It started ranging here. And when the price starts ranging, we don't want to trade this. This is a very dangerous situation to take trades, and especially for everyone that trades following trends. It can be very tricky to try to know when the price is about to break out or when the breakout will be a real breakout and not a fake breakout. Since we are on an uptrend, we should expect the price to make a breakout to the upside. This was just a small movement of accumulation during some time, and then we can see here the breakout to the upside. A lot of people trade breakouts waiting for the price to break the previous high, like here for example. You can see that the price broke the previous high, but then it was rejected immediately to the downside. You can see a big red candle here. Then we had a new higher high there, and the price tried to break it to the upside and it was immediately rejected again. And then we had another new higher high there, and the price tried to make a new high, tried to break the range, and it came back down again. And then we have another higher high there where the price tried to break again and it was rejected. You see these big red candles here, it was a big rejection. So we have a lot of fake breakouts here, and this can lead to a lot of stop losses. If you put your stop losses somewhere under the last low of the range, for example here, you would be stopped out here if you tried this breakout. If you tried this one here and you put your stop loss under this last low, you would be stopped out here. And you can also put your stop loss under the bottom of the range, but this is a very big stop loss. The price didn't come as low as this and it would have worked out, but this is a very big stop loss and you need a big movement just to make at least 1-to-1 risk reward on your trade. And this is not the best approach to try to trade a breakout. And a lot of these breakouts, before they actually happen and before they move and make that exploding move to the upside, a lot of times they tend to come down and make a last peak, a last fake breakout to the downside and then going up. And this stops everyone that is trying to trade the breakout to the upside, which failed here, which failed here, which failed here. So if you are trading breakout just when you see the price breaking the previous high, you would have failed a lot of times and you had the potential of being stopped out with a big stop loss, and this is something that we want to avoid when we are trading. So how do I look at this situation? First, I see that the price is holding above the moving averages. Before this breakout, it tried to make a leg and it actually tried to start a downtrend, which failed. And immediately after this, we can see this big green candle here. This big green candle which is bigger than all the other green candles that we see in the past, that we saw on this sideways range. It didn't have a big red reaction. You don't see a big red candle like this, you don't see a big red candle like this, you don't see a big red candle like this. You don't see something like this here, something like a big rejection. And instead of that, you see a small red candle, and the price was actually holding here without rejecting a lot. So this is the first time in this range that I see that the price wants to actually break to the upside. We don't see big rejections here, we see the price holding. And my first entry point would be at the break of the high of this small red candle. And my stop loss would be a small stop loss just under this small red candle. And then we can see that the price continued to move up, although still very slowly. And then it had another small red candle. The price tried to come down, but again, it was not a big reaction. It was not a big red candle like this. The price was still holding above the moving averages, and it came to the 8 moving average to make a little pullback. And as the price breaks the high of this red candle, this is another good opportunity to enter and wait for a break of the high of the range. And my stop loss, small stop loss under the wick of this candle here. But now we have some resistance zones here that we need to watch. This is the last high of the range that we see here, but there was another high that the price made before it started moving sideways, and we should be aware of this high level too. When I see the price holding here without that big red rejections, I'm pretty sure that the price will break this previous range at least until at this resistance point. And this is where I have to be careful now. So when the price hits this resistance point, you wait for the breakout if it really happens, and then you go and try to get the most out of this move to the upside. And if you do that, you can protect yourself with your trades. You put your stop loss at break even, for example. If the price doesn't break this high level, this high resistance, and it rejects with a big red candle, you are protected at break even. And then it's just waiting, and you can see here that the price made a big breakout, it made a big move to the upside. And what's the risk reward of this trade? You have this small stop loss here, and then the price moved up to this level here that we can see here. And this is like a 1 to 5 or 8 risk reward trade. This is a huge risk reward. And the same on this small trade here with this small stop loss. This is also a high risk reward trade. And this is the kind of trades that you want to take and that you want to take advantage of. And this is the kind of trades that will make your account grow in the future. If you go for small rewards and big risks, it will be more difficult to grow your account, and it will be more difficult to cover your previous losses. And with a trade like this, even if we lost 1 or 2 trades before, we could quickly recover that losses and even make profit on top of that. But this is my view on the H4 time frame. But my favorite way of trading is to take scalps on smaller time frames. Usually I trade the 2-minute time frame. And now let's take a look how to take advantage of this breakout to take trades on small time frames. I'm going to put some mark here just to know where we are. Then I'm going to the 2-minute time frame. And here we are. This is the 2-minute time frame. This is the blue rectangle that I drew on the H4 time frame. So I would use this 2-minute time frame to take advantage of the H4 time frame breakout to take quick scalps and make my day very quickly. So as soon as the price broke this first resistance here, you can see again the price holding. You can see not a big red candle to the downside. Instead, you can see that the price held here above the resistance, and here it could be a good zone to place a trade. at the break of this red candle, you put a small stop loss there, and then you can target that other resistance there, that higher resistance that we also marked on our chart. But what did it happen when the price touched this resistance? The price actually made a big red movement to the downside. And we don't want to try to take trades here. After a big move to the downside, a lot of times the price can make a bigger correction and you have a bigger chances of being stopped out. So what would I do? It's to wait for the price to break that last resistance, and that it happened here, and then wait for a pullback to the moving averages. And here we can see a perfect entry. We see a pin bar that hit the 8 moving average, that hit the 20 moving average, and at the same time it hit the resistance line. So there's 3 levels of support here, and this is a great place to take a trade, guys. At the break of the high of this pin bar, you can hit your buy button, you can put your stop loss under the pin bar, and then wait for the price to make a run and break the previous high. And then we have another pullback, the price coming down to the moving averages, being rejected. You see this red candle being deleted by this green candle, and this could be another good opportunity to trade. You can buy this and wait for the break of the previous high to close your trade. Here it didn't make a big run after the break, so you could close here or at least wait some more for the price to actually break this zone and make a good move to the upside. And if you didn't enter here, we had plenty of other opportunities. Here it could be another good opportunity to enter. You see a red candle on the moving average being deleted by a green candle. This could be another good opportunity. Again, another pullback here. This could be another good opportunity. Another pullback here. This could be another good opportunity. And as the price makes a run and breaks this previous high, this is a good place to take your profit. And then another pullback to the moving averages. You can see a red candle being deleted by a green candle. You hit your buy button, you wait for the break of the previous high, and then you get out at higher highs. And the price kept doing the same here again and again, and then at some point you see a big red rejection. And what happens when we see a big red rejection? We don't want to trade immediately against this. And if you want, you can keep going. You see this big rejection is similar to this one. If you see the price holding above the big red drop after it tries to recover, you can continue to do this, or eventually the price can start going down. But we don't even need to trade more, guys. This was like 3 hours of trading here, and we just need to take 1 or 2 quick scalps a day to make our profit, and then we are out. And you can see that these are trades of 2, 4, 5, 6, 8 minutes, not much more than that, and that's how I like to trade. I take a trade that lasts 4, 6, 8 minutes, then I'm out and my day is quickly done. And this is how we trade every day on my trading chat room, on my Discord chat room. We trade indices futures, we trade stocks, and mostly we like to pay more attention to the open of the markets. That's when we usually get the bigger moves and the quicker trades, and we make our day very quickly. And if you identify with this kind of trading approach, you can join my trading room. You can see the description of this video, and you can apply to join my Discord trading chat room, and you can trade with my trading family. So guys, I hope that you liked this video, and if you did, please leave a like and let me know in the comments if you want me to make more videos like this and help you with your trading. Trade safe and see you on the next video.